Good afternoon. My name is Scott Redler, Chief Strategic Officer at teachforlive.com. Welcome to today's recap and look ahead. So you're going to read everywhere all about the quarter, the first quarter. We closed greens, big gains across the board depending where you look, or big gains or big losses depending on how you handled it. As a trader, you have to be quick, you have to adjust. And there are some that were able to do it. A lot of guys had a great first quarter. Some guys got taken to the cleaners in the first 5 weeks and then caught the rally. Some, got stopped out of longs because we went further down and then started shorting and got squeezed. And, depending on where you look, everyone did it differently. So what I want to do is I just want to show you a quick anatomy, really, of just say the spiders to show you, where you could have switched gears and how technically you could have handled this. So next time, you're not fighting a trend, you're not just listening to people on TV, you're not getting too in bed with the fear mongers, and you're not getting too uberly, bullish when, you're not ready to. So there are definitely some times you have thoughts in your head, and then there are times when the market doesn't confirm them and you have to adjust, or the market confirms it and then you put it on. So let's just take it, right to the spiders and let's go through there. So if you remember here, this was the low that was put in place, in January. And here was your higher low. This was the day that, remember that memory lane, remember that little, 2:30 in the afternoon, the article by the Wall Street Journal, that said that they might cut production, and you had that move that was hard to trust because you're like, wait, was it real or not? Well, second day, you had another up move. And then if you remember, during these 2 days, everyone said, oh, you can't be long in the market because, China is closed and going to open up and you're going to be, screwed. So that was that day. So really this first 4-day move was not the easiest, to handle. I remember, I think, on the VTF, our better day was here because, you had some opportunity in the morning to buy it. And then I think we were pretty much done into this third day, and then you had your fourth day. Really, when it became tradable was right here because you had your first move up, and then it went sideways. And I remember we were short on this day, and this was the day that we reclaimed the 8 and 21 day, and this was the day that you could have said, okay, we had our move off the lows. We just saw a red dog reversal with this pivot, with that pivot. Now's the time to get in some stocks. And then you had a quick 3-day move, got extended. And then if you remember, right here, many guys said this was it. Okay, here's your 2-day pull-in. You had a reversal here. Get out of Dodge. We're now into this 196, 197 area. That could be some resistance, et cetera, et cetera. And then we opened up the next day after holding the 8-day and engulfed this 2-day range. So if you happen to have been short here, big overnight thinking we're going back to the lows, you could have, adjusted when we took out this high here. And I know this would have hurt. If you were short and you had to admit to yourself, and let me get out of the way, that was 196.23. That day we closed above 198.21, $2 later. And then pretty much went 4 more days straight where people were caught. So right here on this day was, pretty much the day that you had to adjust. Okay, and then on this day was your next session to adjust. Otherwise, you could have been taken all the way out to 202.50. Then if you remember, the 200-day was right there. We had another, sideways move where it looked as if we were going to break and close below. I think this was on the ECB day. This is when a lot of people came out, saying rally off again, we're done. The Europe closed on the dead lows. We were falling out of bed. I know I was very short that day, and it turned a great day into a bad day. But anyway, you had to adjust because we had that doji, and then we gapped up. And, here we are now to end the quarter with 2 small sessions ahead of a jobs report, above the 8-day, above the 21-day, with, a heck of a lot of resistance in front of us. The bears have an argument, the bulls have an argument. At this point, we've had a big move, lots of tradable spots in the midst of it between the Russell and the banks and the Qs and whatever it is. Let's just dissect it this way with the spiders. And now here you are, 2 little down days and still holding up well. So you're going to hear people talk about the blackout days. The blackout, which means banks are going to be reporting earnings, not banks, just the overall stocks in the next 2 to 3 weeks. So the 2 weeks before they report, they stop their buyback. So that's going to be a reason why we're going to come down. You're going to hear they just marked up the FANG stocks because, they window dressed. So now they have to come down. But meanwhile, you have new quarterly money coming in, perhaps the first few days of the new month. Then you're going to hear how historically April's a great month, but then you have to sell in May. So, if you're a trader, let's just take it day by day. If you have a 529, let's hope you're putting your monthly money in. If you do have a 401k that you put monthly flows in, you live through the financial crisis, you live through the dot-com bubble, you live longer term. If you trade for alpha, you have to try and be long when you're above the 8 and 21-day moving average, and try and be neutral or short when you're below. Because if you go back to the chart of the S&P, during, when we broke here, okay, look where we broke from. The market was below, the 8 and 21-day, okay, and stayed below it during this entire move down until finally it came up to the 21-day and failed again, and then this was the first time we reclaimed it. And if you waited till we reclaimed it, from 192 to 205 is still 130 handles of a more calculated move. So now we'll figure out what's next for the second quarter. I'm not going to get into stocks, and I'm not going to get into the nuts and bolts, but I do that every single day in my morning note, my morning call, on Twitter. I'll get back into that on Monday after the dust settles with the jobs report tomorrow. I'll be trading in short hills. There'll be no morning call. Hopefully you had a great quarter. If you didn't, you know what? It's only the first quarter of the year. There are many more quarters to come. If you had a good one, there are definitely some things you could do better. And the beauty of a quarter being over is everyone starts at 0 again for the second quarter. And for the month being over, it's a new month. So try and put, some of the footsteps behind you and make some, progress in front of you. And hopefully, we helped you with all the content and resources that we put on every day, from the morning call, the recap, my note, the VTF, all our content providers. We try and be here for you because we are also traders as well, and that's how I make the majority of my cash flow, not by sitting here in front of the camera. Have a great day. It's Thursday. I'll try and situate with you guys on Twitter for tomorrow for the jobs report. I am basically flat equities into it. I did put on some calls in the bios because they perked up a little bit today. And really I'm going in pretty neutral after spending most of the week long. Have a good night.